All right. Well, to all the students that are joining us and rolling on, we look forward to seeing you someday, but we're sad to hear that you will not be arriving in the next 2 weeks, but we look forward to welcoming you back to grounds at some point. I'm Christine Mahoney. I direct social entrepreneurship at the University of Virginia. And for the past 8 years, we've run courses and programming on social entrepreneurship, social enterprise, and impact investing. So some of you may have taken our classes in impact investing. We've launched a new exciting program about impact investing in one of the most distressed areas in the country, in Appalachia. So if you're looking for immersive classes, we have a J-term class on that now, as well as a May-term class. We are excited to announce that we have a whole new set of fellowships on impact investing in this space. So if you get real excited about impact investing and socially responsible investing after our discussion this evening, direct yourself over to seatuva.org and you can learn more about ways you can get involved. So this evening, we are so excited to have 3 UVA alumni with us. We're going to be talking about building a sustainable legacy through impact investing and ESG investing. And if you don't know what ESG stands for, by the end of the hour, you will be much more informed. Whether you're a student at the university, which we have about a little over 40 people signed up for this evening, and most of you seem to be undergraduates and graduate students at UVA, but we have some young alumni as well. But whether you're a student at a university or you're someone that one day plans to have a retirement package, maybe you hope to work for a major foundation or you're actually interested in going to work in investing, you have a reason to care about how your investment dollars are being invested. The trillions of dollars in the capital markets can fuel climate change, racial injustice, economic inequality, massive human displacement, or those trillions of dollars can be steered toward innovative clean energy innovations, ways to combat climate change, ways to invest in female entrepreneurs and minority entrepreneurs to advance equity. We can be investing in companies that are leading in LGBTQ rights. The opportunity for positive impact is nearly endless if we're thoughtful about the way we invest our dollars. So tonight we're going to have a discussion about how money matters and how moving money from extractive and destructive industries towards socially responsible investments can steer our world toward a better future. So I'd like to introduce each of our panelists who are going to talk with you about socially responsible investing, impact investing, and environmental, social, and governance investing. So first we have Christian Namak, who is a sustainable investing consultant. He works with institutional asset owners across Europe, many of whom have been real leaders in this space. And he is a co-founder of Hansa Impact Partners, and he's a graduate of UVA and was an Eccles Scholar when he was here. Next, we have Elizabeth Bouvet, who is also a strategic sustainability consultant. She's a former US Social Investment Forum research manager, and she actually created ExxonMobil's first corporate social responsibility platform. She's also a UVA grad, a double BA in Foreign Affairs and Women's Studies, and so that's something too we can talk about, is how all different types of paths can direct people into a career in impact investing. She also holds a master's from the Fletcher School at Tufts. And finally, we are super pleased to have a recent UVA grad, Jamie Wurtz, with us. She was the former leader of Divest UVA, which is a student-led movement that advocates for UVA to fully divest its endowment from fossil fuels. As many of you know, we have a multi-billion-dollar, I think we're pushing toward a $9 billion endowment. And so that was super important work that Jamie led up, and I believe it continues. She can talk with us about that. They published an open letter to the Board of Visitors in the Cab Daily, which some of you out there this evening may have read back in May. And she's currently working in solar advocacy with Generation 180. So to kick it off, I'm going to ask a first question and hear from all of our panelists. Maybe we'll go Christian, Elizabeth, Jamie. Can you tell me a little bit about what is ESG investing and impact investing to you? There's a lot of letters out there. There's a lot of debate about what these different terms mean. What do they mean to you? Christian, you want to start us off?
Yeah, sure, I'll start. It's great to be here. Thanks for asking me. And the terminology of the ESG or impact sector is confusing, even to those of us who've been doing it for a while. And the terminology is evolving and changing. It's still a pretty young industry. And I'm going to actually use a visual aid. I'm going to do a screen share. Hang on a sec. And I'm going to show you a chart that goes through different kinds of investing. And that'll help me explain this to you. So if you look at this chart, to the left of the chart is general conventional investing. You know, whether it's stocks or bonds, you know, you take your money, you buy some stocks or you buy some bonds. You might have an investment philosophy. Maybe you're a value investor or a growth investor, you know, and that's what most of us think of when we think of investing. And if you turn to the right one notch, and this is new, the term ESG was coined by Secretary General Kofi Annan when he ran the UN in 2004. And he challenged the heads of the banks and investment banks at the time to think about how the financial sector can affect positive change through how they invest. And he said, let's look at the environment, E, social justice, S, and governance, G. And he wrote a famous Christmas letter to investors that year. And then a big report came out. I'll leave you to that report later. So the next notch to the right is this ESG funds and portfolio screening. And basically what that means is you can think of caring about the environment, caring about society, caring about how companies are governed as an set of investment themes, and apply that to your analysis as an analyst or a portfolio manager. And that's what we call it. It's portfolio screening. It's usually taking bad things out more than putting good things in, typically. And that's what we call ESG screening, portfolio screening. That's kind of, and you still expect to get market rate returns. The next notch from that to the right is called impact investing. And in this chart, it was made by Credit Suisse, the bank. They have return first impact and impact first impact, and they separate the two. Return first impact, basically as an investor, you're starting with thinking about getting good returns, getting market returns, but you also think about, you know, where can I make an impact? Whether it's in the environment, in society, in better governance. It could be private equity, it could be bonds, green bonds. It's a rapidly growing sector. It could be equities, it could be venture capital, any asset class you could apply it to. And so impact investing, it's more, as opposed to negative screening, it's positive. You know, where can we invest money for a positive outcome as opposed to take money away from the bad investments? And, you know, many of us are finding that you could actually make a lot of money by investing positively. So you get great returns, you get market returns, you get better than market returns in the last year, in fact. The next notch to the right is starting to veer into philanthropy, away from investing. And that's impact first. It's you first care about the impact, and if you make money, great, but it's not the priority. And that's where it starts to get murky for pension funds, endowments, and foundations, because by law, they need to first think about the return, second, other things. But if you're a private, wealthy individual and you want to just have a good impact with your, $1 billion or whatever you might have been lucky enough to earn, you could be a philanthropic impact investor. I mean, Pierre Omidyar, one of the founders of PayPal, is a good example of that. And if he gets a good return or not is less the issue. And then the last box here is venture philanthropy. Oh, sorry, there's 2 more boxes. Venture philanthropy is, I'm going to seed invest this new initiative. I might lose my money, I might not. I don't really care. I can afford to lose it. That's not investing, that's philanthropy. And finally, philanthropic donations. And that's what we think of as philanthropy. That's, again, not investing. So that's kind of a good spectrum of different kinds of investing and how ESG, then impact, and then away from investing, philanthropy evolves. And I think I'll stop with that. Thanks.
Thank you. Elizabeth, you want to share next?
Sure, thanks, Christine, and so good to be here and be with you all. That's such a helpful map of the entire spectrum that Christian has laid out. I thought it might be useful to kind of think about it in terms of that middle slice, because I find I don't know of a more heavily nuanced in terms of the semantics field than this whole area of impact investing and sustainability as a whole. It's amazing how many different interpretations on so many different words that are often used synonymously. And so in the middle of that section, when we're talking about, what I have found is when we're often talking about impact investing, ESG investing, oftentimes people do use them interchangeably. And so I thought it may be useful to offer my perspective on where I find the difference in terms of how they play out. So to me, when I think about ESG or ESG investing, it's typically a series of a wide variety or array of different types of lenses that are becoming increasingly sophisticated lenses. So as you were mentioning early on, Christine, like gender lens, climate lens, very, very specific and nuanced that can have a very detailed way of looking at any particular asset or groups of assets or holdings, and then using them to better evaluate risk, growth, opportunity, pain points, pitfalls, growth areas. So it's a tool and a lens, whereas impact investing is, I think of it as a verb. So it's more of an intent or an agenda. So a way to navigate and be able to apply the intention of pursuing social governance or environmental pursuit of a benefit alongside maximizing a financial return. Although, as Christian pointed out, not all impact investors are interested in maximizing the financial return. Some are happy to take it as secondary to the ESG return. But the idea is that they're trying to steer it in that direction. So, you know, if you think about ESG as a lens, literally like a pair of glasses, right? Like what they help you see was already there. So take like a road, you're driving down a road. If you happen to look at your gauge, you know, your dashboard, and it helps you to see that the incline, the grade of the road is going to incline 20%. You then have more information because you know the road is going to increase 20%. And that then is going to have an effect of you decelerating. So you have then a decision to make. You can either step on the gas a little bit more, you can, you know, status quo and just take the deceleration, or you could take a totally different route entirely. So you're using the ESG lens of what you read on your dashboard to make a decision about how you're going to navigate or steer, which is, in my mind, impact investing. So that's a useful way for me to sometimes determine the difference between the two and how we talk about it. From a corporate perspective, you know, most companies, from my perspective, working inside a couple of big companies and then working outside as a consultant for a number of others over the years, I am finding that companies are less and less, for the most part, and this is a generalization, but for the most part, are less waiting around passively like they used to receive ESG research organization surveys on their environmental social governance performance, or sort of loaded for bear, waiting to go on the defensive for like a shareholder resolution to come down the pipeline. Some of them, and of course these are the more progressive ones, but increasingly mainstream companies are increasingly using the tools of impact investing internally in terms of how they're handling their own dialoguing process, even in terms of their protocols and management systems. So, for example, corporate venture capital programs that are starting to be developed in some of the really old industries like food, for example, big food companies, Kellogg's and Tyson's are a couple that have created what we call CVCs, corporate venture capital houses or incubators inside, because they're noticing that small health foods are more interesting, particularly to millennials, because they have, and their environmental footprint or the health footprint or social, human rights, even if you think about like cocoa beans, a number of things like that do matter to people, are increasingly important. And so they're trying, several of them, to incubate those ideas or buy them, acquire them, and are recognizing that then means they have to learn how to not just talk to a whole other group of stakeholders, but also manage in a completely different way with new metrics. And so they're using impact investing in that sense to try to navigate in a little bit of a different world and start to belong to it, to start to become citizens of that. And then I think the other thing I've noticed from the corporate perspective on impact investing is how there's a sense of trying to share and create value along the supply chain. So using the tools of impact investing, largely because they're increasingly getting graded on it by some of the major investment houses and banks, and trying to then push that back along their own supply chain, and using those same kind of metrics and tools to play that out. So like Walmart's a great example that's really changed the environmental, environmental footprint of a lot of the products on its shelves as a result of that kind of pressure. So it is an alphabet soup, and there's a lot out there, a lot of players and a lot of different ways to go about it, but a really interesting space.
Thank you so much. And then Jamie, do you want to weigh in?
Yeah, I think Christian and Elizabeth provided some really great explanations about the differences between ESG and impact investing. But to me, at its core, impact investing aims to create lasting positive impact. And I like this broad definition because it enables investors and whoever's engaging to hone in on their interests, whether that is primarily financial gain, or if it's an environmental or social issue that they're passionate about. Through my work at UVA and research, I've come to find that private capital plays a really important role in long-term social impact successes. So philanthropic and government involvement, it can play a role, but when the three coalesce together, they have the potential to produce a much larger impact and creates lasting change, more so than just investment at one of those three scales.
Maybe I'll jump in while Christine is sorting that out, because I have a list of questions that we're going through right on the agenda, so I can just jump in now. And maybe we'll start with Jamie and then go to Elizabeth. And the next idea or question is, what is the role of divestment versus proactive impact investment? And I think that's a broad question. Do you want to talk about that, Jamie?
Yeah, I can dive into that. My work with UVA was focused primarily for my capstone with the global environmental sustainability major. And so I focused on divestment, particularly for UVA's endowment, but looked at broad definitions, and I was leading a campaign for fossil fuel divestment. And a major component of that campaign is, or was, my definition of the theory of change. So it's something that different philanthropies or nonprofits can use to define the long-term end goals, and then working backwards to see what steps you need to accomplish along the way. And for me, that ask that I had to define at the beginning was, what were my reinvestment asks? Because that's just as important as achieving the goal of divestment. If UVA was going to be reinvesting money that they were taking from extractive industries like fossil fuels, I wanted to ensure that they were going to incite a positive impact. So for me, reinvestment presents a unique opportunity for universities or investors to partner with either local communities, groups in need, to promote equitable economic development and foster long-term system change. To me, that's what I get most excited about with divestment, is that as more and more investors and universities and other large entities take part in removing money from extractive industries, these campaigns can strengthen system change and create a powerful opportunity to engage young people in a new economy, new opportunities, by leveraging the resources of some of the most powerful institutions, by shifting economic capacity. Yeah.
I can speak to this briefly too, and then maybe Elizabeth can speak.
That would be wonderful. Christian, if you could share a little bit about your work with the Scandinavian institutional investors, right? They were really out in front in divestment, and then now they're really out in front in investment.
Absolutely. So And the third phenomenon I'll bring to this question is the idea of engaging. So the question often comes, should you divest, if there's a stock in a portfolio that you think is bad, let's just use Exxon as everyone's favorite bad wolf. Do you just sell the stock and walk away, or do you keep the stock, and as a result of being a shareholder, you have the right to engage with the company. You have the right to go to the shareholder meeting, you have the right to make a proposal. And the Rockefeller family, who founded Exxon back in the day, has actually been the most outspoken shareholder group to engage with today's Exxon management to get them to talk about the new green economy. And do you intend to reinvest the profits of Exxon into wind farms and solar panels and non-fossil fuel energy industries? And quite frankly, the answer is, in our case, is no. So the biggest investor in the world, the single biggest pool of assets, is the Japanese pension fund. And it is $1.5 trillion, something like that. And I know he recently left, but I know the former chief investment officer, and he's very big into green bonds. They're big impact investors through the bond market, especially. The second biggest is the Norwegian state pension fund, and they're $1.2 trillion. And the reason my name is spelled Christian with a K is that I'm Norwegian, and that's the Norwegian spelling. And they have been my client for 30 years. I've known them since they started. And ironically, the Norwegian pension fund's assets come from proceeds from North Sea oil that was discovered by England and Norway back in the 60s. And I spoke with the person in charge of the equity portfolio just a month ago, and he was talking about how divestment and engagement together is a perfect strategy, because if you own the stock, you get to engage with the company. If the Norwegian state pension fund picks on, the chairman picks up the phone. The $1.2 trillion investor gets every phone call answered. So they get to engage, but they can also hold the threat of divesting over the head of the company. And if one investor divests, they don't care. But if suddenly there's a huge divestment, the cost of capital, it'll depress the share price. The cost of capital goes up, and it's bad for Exxon to run their business. So, divesting together with engaging as a double-sided coin strategy is what works best. And I think it's good. I think it's a good strategy. Big investors like that have to own a broad base of stocks. They'll invariably own things where they want change to happen. It might be a social issue. It might be, why don't you pay women the same as men? Why don't you have 50% of your board women? Why is 50% of the C-suite women? Gender equity, gender lens investing. That's a big topic that I care a lot about. And the Nordic investors are really out in front of gender lens equity, gender lens investing in gender equity, for example. So, as a shareholder or a bondholder of a municipality, if you're a big bondholder of Charlottesville's bonds, you can call the mayor of Charlottesville and he or she will take your call. You can talk about, whatever it is, leasing, statutes, equity, healthcare, access to healthcare, whatever it is. So, yeah, that's enough for me. Thanks.
Thank you. Elizabeth, have you had experience with your clients? Do you find your clients first come with the idea that I want to divest from these, quote unquote bad companies, or are they coming with a more proactive thing and then realizing to move their money toward impact, they have to pull it out of less impactful companies?
Yeah, I mean, I've really seen it both ways, for all of the reasons that both Jamie and Christian mentioned. And I think that, I don't want to be redundant because so many good points have been made. I think it's, engagement with teeth, or even on the asset management side, management with consequences is the way that is most effective. I apologize, my beagle hates my litter carrier predictably, so I'm sorry for my background noise. But yeah, I mean, I think, as the activist in me wants to keep the seat at the table and hold the space, as powerful as divestment is, to keep the voice there unless it is so morally repugnant. And I also think there is a case for where the risk begins to outstrip any kind of potential return with what we're seeing with fossil fuels, and using some of the really good climate science and some of the more progressive pension funds are starting to do this with the 2-degree by 2030 future as a management tool through the portfolio, for example, can be a really effective way to start managing sort of with the stick some of the holdings. That can be an effective way to do that kind of tough management approach if you're big enough, if you're a big enough asset holder in the way that Christian was talking about. Yeah.
Thank you. Next, I'd love to hear about, and we have a lot of students that are interested in this space. We've always have long wait lists for our impact investing class. I'd love to ask Christian and Elizabeth, since this is a new sector, you probably didn't major in impact investing back when you were at UVA, because we still don't have it as a major. So how did your careers bring you to this point?
I can take that first. Yeah, so I'm 57 years old, so I got my undergrad degree in 1985, and I was an Eccles scholar, as Christine said. So the good and bad thing about being an Eccles scholar is that you could do whatever you want for 4 years. I mean, you have to go to class, but you don't have to declare a major, you don't have to take any required courses. And when people ask me what I majored in, I just kind of, I don't say, I was an Eccles scholar, because no one knows what that means outside of Virginia. So I just say, I majored in philosophy. And when I look at the courses I took, I took, a lot of literature, English lit. I took creative writing. I took lots of theology, philosophy. I remember a great course, History of Law, Part 1 and 2. And I didn't take any, I took one econ course and I dropped it halfway because I found it so boring. And so I was very much of a liberal arts person. I took a course on, Wagner's music and Bach, and I did real liberal arts stuff. And when I finished, I didn't really have a plan. And although I kind of thought, I think I'd like to teach, go get a PhD, probably in philosophy. And I spent my 3rd year abroad at Cambridge in England. I really liked it there, so I applied to go there as a PhD candidate. But I had a year to go. And a friend of mine had gotten a job at Solomon, which at the time was the hottest investment bank, the smartest people, the real kind of sexy place to work. And I got an entry-level back office job there just to kill time until I hopefully would go to grad school in the fall. And I never left. I mean, I left Solomon. I kind of, I entered data in a back office from the trading desk. I worked in equity capital markets, but the atmosphere of really smart people and lots of money together was just intoxicating. But I didn't, the greed thing really turned me off. And the mid-'80s to late 80s, I mean, the greed thing, it's never gone away, but it was really trending big. It's when all those movies came out and, Wall Street, et cetera. So I found my way to a firm that was the top-ranked research firm, Sanford Bernstein, because I wanted to work with smart people, do research. And it was there that I first started hearing about impact investing was in 2010 by JP Morgan, together with the Rockefeller Foundation. They wrote a report and they coined the phrase impact investing. So it's a quite modern term. Back then, I came across a few investors who were interested in socially responsible investing. And usually, and I've only dealt with institutional investors, usually it was a church pension fund or a synagogue, and it was religious-based exclusions, no alcohol, no tobacco. The Quakers, the longest-standing kind of impact investors, the way we use the term today, back when they first came to the U.S., no weapons, they're peaceful. So I heard about it then, and and ultimately I had a very conventional investment career working with big institutions. And it's when I started working with the Swedish pension fund, and I ultimately went to work for them, where they decided that they had to use socially responsible parameters for how they invest. And they adopted the Brundtland report from 1986 as their guiding set of principles. And I was on the committee that helped figure out how to convert the Brundtland Commission on on sustainable development to a set of investment guidelines. So that's kind of how I involved. And the last thing I'll say is that I sort of meandered, and I have to make a political comment. When Donald Trump got elected president, I thought it was time to move back to Europe, and I was talked into staying fighting because I care a lot about environmental justice and I care a lot about social justice. And I suspected that he didn't, and I think I've been proved right, and it's been worse than I could have guessed. And I thought the best way I can work to improve environmental and social justice outcomes is to go back full-time into finance, into this new impact investing space. And I started my own firm, and it's, business is booming. People care about this stuff. So that's my more than 2 cents, 3 cents. Thanks.
Thank you so much. Elizabeth, do you want to share a little bit about your path?
Sure, yeah, happy to. Yeah, I was always really focused on social and environmental change work. It governed what I studied and what I thought about when I was at UVA. As you said, I was interested. I was really, I was studying a lot of stuff like Christian, heavy duty liberal arts background, but I was really interested in where these issues were like affecting global and economics, and where the intersection was with economic and the global kind of macro issues at the same time, whether I was like looking at like literature or whatever, I was looking at history. Ended up doubling major in foreign affairs, and then this is very archaic women's studies, now it's gender studies, right? And then all of this sort of intersection of ideas was really reinforced with my first job. So I went out to California and I worked for a nonprofit, a global nonprofit called Global Green in Los Angeles. And it was my first job. I was helping them. I was a program assistant, and I was working on, at the time, California had just deregulated its utility market. So it was a brief moment of just kind of madness out there. But it was really exciting because consumers could choose if they wanted, what kind of energy they wanted, and solar and wind were on the table. And so a lot of the job was to help educate like regular folks and small businesses on different energy choices. And so it was exciting to me to be able to see how there was like this brand new marketplace that was formed with like incredible environmental benefit, and then to start explaining to people who maybe didn't care about the environmental benefit what the economic of that was, what the social ramifications of that were. And so, I had this very nonprofit bent, but I started to see how with something like a new marketplace, how a real fulcrum for change could be business. And I did not want to get an MBA. That stuff sort of scared me off a little bit too, like Christian was saying, and that I think at the time, excuse me, really evolved since, but at the time that, there was starting to be what they called like CSR classes, but they were just totally like, like you would take volleyball. It was so on the side. So it wouldn't have been really anything I could dig into. I wanted to be able to approach it and to get in some kind of a deeper degree, a deeper approach that would let me study it from a business perspective, law, policy. And I found that at the Fletcher School in Boston. And I really was so lucky to land in Boston because it was and is such a financial and investment hub. And so while I was able to continue to study ESG, I did like international environmental policy and development economics, which let me, again, kind of keep centering in on this from this perspective. I got an internship at SRI, so Socially Responsible Investment Research firm called KLD. It was a really old one. And I was an environmental analyst, and I was running the S&P 500 through all of these environmental indicators, like resiliency, and trying to see how did it match up with their financial performance. So it was a really great way to see how this worked. And from there I left after graduating, and I became the research manager ultimately for the trade association that would produce a report and say, here's all the assets under management and here are the characteristics of the assets. And what I learned was at that time in impact investing, into the late 1990s, early 2000s, so it was still called SRI, you had two choices. You could either go research or you were a financials person, in which case you needed to get your CFA. I didn't want the hard financials enough to go for my CFA. It just wasn't as interesting to me. And I enjoyed research, but I wanted more action. I wanted to be, I was more of a strategy person and still am, and I wanted to be more involved in where some of the engagement and deals were. Like I just wanted a little more of the strategy. And so I just naturally, I got a job at ExxonMobil. That was a joke. So I wanted to figure out how this stuff works in the belly of the beast. So if you're really trying to do the hard work of pushing for climate change, pushing for human rights, pushing for some really tough corporate governance in maybe a place that doesn't have any rule of law, like if you're operating in Azerbaijan, you're trying to do human rights in Aceh, Indonesia, or climate change everywhere else, and you're a company that's so deeply rooted in fossil fuels, how would you try to approach that and try to do that? So I was young, but it was a really great learning experience, and I did help build their first CSR report, which was a labor, but it worked, and I got a lot out, and I was able to move the needle and build something, and a dashboard for stakeholder engagement. They didn't talk to NGOs not too long after Valdez at that time. So that was really, and it really helped. It was an 80% internal sell job and helped me to learn how to be an intrapreneur in a way and build something inside. And when I emerged out of that after, a lot of Excedrin, but also a whole lot of learning, 7 years later to form my own consultancy, I found that the impact investing world had really evolved and changed and became so dynamic. It was no longer that binary anymore. There was a lot of room for a strategist like me. And so now, even though the consulting I do isn't only impact investing, I have some really interesting clients that are B Corps, so they're blended nonprofit, for-profit, or place-based foundations, or private equity groups that would have never thought themselves interested in these issues, but are now because for a lot of reasons. So it's really changed, and there's many roads up this mountain if you're interested in it.
Terrific. Thank you so much. That was awesome. Jamie, I'd love to hear a little bit about how did you get passionate about responsible investing and divestment during your time at UVA? And are you seeing other students get interested in the fight as well? Did you form Divest UVA? And tell us a little bit about your journey.
Yeah, absolutely. I definitely have a different perspective because I haven't been working in this field for 20 years plus. I did just graduate in May. But about 2 years ago, I started working with Generation 180. They're a clean energy nonprofit based in Charlottesville, Virginia. And through one of the projects I was researching for them, I was focusing on what businesses are buying clean energy. There's a lot of major companies right now that are running on 100% renewables. And I got interested in that trend. And at first, as a first year, I was like, but Nike has a lot of issues with child labor and other things. But I saw that they were driving positive change in the energy field, and this sort of paved the path for me to see how private capital can play a role in driving positive change. And also, if you are a GSVS major, you're doing a capstone, and I wanted to do something that finally wasn't just writing a paper. I kept writing about social issues and environmental problems and not tying it to action. So for my fourth year, I partnered with another peer of mine, Abby, and we sort of co-founded Divest UVA. There was a movement that started under Climate Action Society, which is now renamed VSEC, and those students did a lot of really great work. I attended one of their meetings back in 2016, and we were focused more on the grounds engagement with the Board of Visitors, but that movement sort of fizzled out, and so we were reigniting it in about the end of 2019, early 2020, and COVID sort of derailed our plans for on the grounds engagement with students around a petition. And yeah, maybe you've seen the op-ed, but what caught my attention was UVA's endowment. Colleges and universities in the US collectively own over 500 billion in assets, and that's a pool of money that for many of us, the power for social good was not unnoticed. And one of the key resources I used in my research came from the Intentional Endowments Network. So this is a coalition of schools and universities with combined endowments of over 102 billion, and they work to build unity and unify the college and university-based responsible investment movement. And so there's a lot of really great work there. They have some white papers. If any of you fellow students are interested, I wasn't an expert in this field, and there were a lot of easy to read and not too bogged down in the specifics of responsible investment and the movement and endowments. It provides a great case study and entryway into the field of ESG and impact investing, and differentiating between what all these terms are and what the definitions are. So I found their resources really helpful if this is a newfound interest of yours and you want to dive in, especially as you're still in college and want to start to learn more in a field and something you can still relate to. And what was exciting as well is we had a meeting, we coalesced some leaders back, I think the week before spring break and before we didn't return to grounds. And it was exciting that students from all different backgrounds were drawn to this movement. Some of them were part of student council, some of them on the sustainability committee, a few others from the global environmental sustainability major like myself, but also biology, commerce, econ, as well as different geographical and socioeconomic backgrounds. So I think what was most exciting, and I'm excited for this movement to move forward, is that whether you are a pre-med student or you are in the comm school, you can have an impact and get involved with impact investing, whether you think right now you have the experience or knowledge or not.
Great. Well, we're starting to get some questions from the audience, and we're at a point that I'd love to give students an opportunity to ask you all some questions. A first question, one of our participants said, the conversation about divestment and reinvestment reminds me of the recent discussions about defunding police departments and reallocating funds to community initiatives. They were curious if you all, and Jamie in particular, had any thoughts on this. Can lessons from fossil fuel divestment track into these issues of racial equity?
Am I still unmuted? Yeah, awesome. Yeah, I'd love to dive into that. Really great question, and tying it into the social movements going on right now. I am able-bodied, so I've been going to the protests when I can, but I am fully behind defunding the police. And what I find most exciting, and when I'm discussing this with family members that might disagree with me, is being able to describe what those opportunities are. So it's not just defunding, it's active reinvestment in the community and redistributing that wealth to providing the services that aren't available in the community. And so I think a big lesson from the fossil fuel divestment track is that it's not a one-time ask and then you're done. It's a continual process that you keep having to refine and put a lot of energy behind. As you can see through UVA's divestment movement, it's still going on, and a lot of the successes, like with Stanford and other universities, it wasn't students that coalesced one instance and saw success. It was repeated engagement, often student-led, and that's why it's exciting to see so many community-led movements right now around defunding the police, where it's not just one community, but many people combining together. And so I think for both tracks of divestment, continual engagement, and being able to iterate what the outcomes are that are for reinvestment are equally as important.
Great. And maybe Christian or Elizabeth, do you see other potential lessons learned? Like you were talking about engagement with corporates. Are you seeing creative ideas around advancing racial equity through, through shareholder?
Yeah, this is a particularly U.S. issue. It doesn't come up as much in the Nordics, or because we have a history of extreme racism in this country. Maybe Brazil is similar. There are a few other places like us. It's a lot to do with our history of enslaving Black people, Africans, and it's everywhere. We don't necessarily. We're trained to not see it. We're unconsciously trained to not see it, and everybody is racist. We can't help it, and to become an anti-racist is the goal, in my opinion. I've been quite involved in this topic. I was on the board for a while of a college in Kentucky called Berea. And Berea was the first college in the US to educate Black people. The founder he was a Methodist minister. He had a vision from God that he had to educate Black people. And he lived in Virginia, and he had to move to Kentucky because it was illegal in Virginia in 1855. And the mission of the college, it's sort of 50% Black, 50% other. And it's also free tuition. The only college in the country with tuition. And when I started working with Berea and some students at Berea and talking about, and I do some teaching here and there at Bard College and their sustainability MBA and at Berea, we talked about how can you help push the envelope on anti-racism through how you invest your money. And I'm actually working with a few nonprofits right now to create a document. It's a set of investment guidelines that if you care about racism, you can look at the guidelines and you can look at your bond portfolio, your cash portfolio, your stock portfolio, and make some adjustments. The private prison industry is a for-profit industry, and only in this country, the only country in the world where it's a for-profit business. That should be divested for many, many reasons, not just for racial reasons. It's just a completely unethical business. It's also unsustainable. Under the current regime, they'll still get contracts, but under a normal government, that'll be, that will cease to exist. So there's a lot, as much work done on racial lens investing as there is on gender lens investing or environmental lens investing, but the work is starting to get done. And thank you for Black Lives Matter for sounding the alarm bell. I also go to the protests in Brooklyn when I can. I wear a mask and I try to socially distance, but I think it's a really important topic. And investors have a role to play. And if I just want to say one more thing, because we're talking about UVA, I'm going to do one quick screen share of UVA's current endowment and their current, there's one thing I want to show you. I think this will work. So UVA is the opposite of divesting. You can see equities, real assets, and fixed income. And if you look at under real assets, there's a line for resources. That's a polite word for oil. And you can see that in the middle of 2019, year-end June 30th, your endowment was 5.4% invested in oil. And what was the return? Down 10.5%. It was the worst returning asset class by far over the prior year. Prior to that, oil had done well, but we're in a different world now. We call oil a stranded asset. It's going to be worth zero at some point in my lifetime, let alone your lifetimes. So, call your senators, your state senators, and tell them to get EVA to stop putting 5.5% of the portfolio in oil. Forget about the ethics. It's a stupid investment decision. I just had to say that while I was on this call. Thanks a lot.
Thank you, Christian. We have a bunch of other questions and we're pushing up. So I'm going to throw out another one. Maybe if Elizabeth wants to take a first crack at this. Some of these hang together a little bit. What do you see as the biggest barriers to individuals interested in ESG and impact investing, especially individuals with relatively low financial literacy and or relatively small amounts of money to invest?
Oh, barriers to investing.
Yeah, another way to ask it might just be the simpler, which is how can we as students who maybe don't have wealth yet get involved in impact investing today?
Yeah. And Jamie, feel free to hop in because you might have a better sense of this than me as you're closer to it. But I mean, I think, you know, that's one of the great innovations is I think there's a lot of ways now to get involved. I mean, there's a lot of groups. I would start to, you know, there sounds like there's groups on grounds, first of all, to just like plug into and find out what's going on there. There's other groups where you just can start to read some of the things that is going on. I like series a lot. They're out of Boston. There's also a group called it's a long name, Association for Advancement of Sustainability in Higher Education. It's a long name, but they follow a lot of what's going on in impact investing from the university perspective, and that's useful. IEN as well. From actual like application in it, you know, I think that there are some smaller like micro funds that are out there. Your local net impact might know more about that, like crowdfunding kind of Kickstarter versions of micro funding net impact investing. But they're out there and it's a great way. I mean, just, you know, just on the bringing equity, because there is this great convergence on equity, racial equity around impact investing. That's one of the major ways that there's a lot of conversation in this world about trying to get people involved, because the problem is, you know, not just looking at like how so many issues are disproportionately negatively affecting African Americans in this country, from COVID to climate change, but in terms of where the money's going as well, right? So I think the number I just read was like 1% of Black entrepreneurs get VC money, 4% are women, and the rest are white men. And you know, when I go to like startup stuff and conventions, I'm like heartened to see some diversity among the entrepreneurs. I see none among the wealth holders. And there are got to be some out there. And if they're not at that same sort of wealth class, then how do we help people ladder up and pool those assets and monies together? I know that's not exactly the question, but I do think it starts by just starting to kind of build little rafts together. So I'm sorry I don't have a specific answer, but I do think net impact would be a great way to get started.
I'd also echo that, getting involved with net impact at UVA if you are a student. Also plugging to get involved with Divest UVA. I passed the torch down to some really excited students to keep that momentum moving forward for faculty, staff, and students to help put the pressure on UVA. At the end of my paper, I was surprised. At the beginning, I was like, oh, I'll be arguing this based on environmental reasons, but really the overarching theme of my paper, as Christian alluded to, is based on economics, and that it's no longer a wise financial investment to be investing in fossil fuels. So yeah, checking out Divest UVA on Facebook. And after this, I'm sure my email will be sent around as well if you have any particular questions about that. And the last thing I'd say, if you don't have assets to be investing, like myself, I'm just in debt from my student loans. Something that I put some time into was researching some local, now I'm blanking on the term, credit union. And it's exciting when you're young and they're saying, oh, credit cards, you're gonna get points, but all of these are tied to major banks that you can do a quick search and see what they're investing in, and it might not be something that you want to be supporting. And so that's the best way. If you don't have anything to actively invest, divesting through what your savings, if you have any, or your credit accounts are tied to, would be a good place to start. Yeah.
I could add to this, like what can the individual do, whether you're a student or a teacher or anything. We're all consumers, and everything we buy has an impact. And you know, one of the first impact firms is called Generation. It was Al Gore, the former vice president, David Blood, the former partner of Goldman Sachs, the nickname for the company's Blood and Gore, but they're really called Generation. And David Blood says, everything has impact. Everything is impact investing. The impact might be negative, the impact might be positive, but when you spend money, whether it's you're investing money in a fund or whether you're buying something at the grocery store, think it through. Like, what does that product do to the environment? What does that product, how is it sourced? What's the, was it, there's legal, there's modern slavery. Like if you eat shrimp and it comes from Thailand, the shrimp fisher people, kidnap kids and force them to work on boats for 3 months at a time. It's, to research. We have the internet today. When I was a student, we didn't have the internet yet. Google stuff. Where did this product come from? Am I using a lot of plastic containers? Et cetera. So just become an educated consumer as it relates to social justice, environmental justice, or governance. I stopped using TripAdvisor because there's no women on the board. I looked at, there were 5 companies in the S&P 500 that have no women on the board. If there was one that I did business with, it was TripAdvisor. I haven't gone to their website since. So thanks.
I'd be remiss if I didn't jump in to also say that Wahoo's for Sustainability is a great organization for more broadly speaking in terms of sustainability. An organization that's mostly alum, but UVA alum, students, faculty, and staff that's been working to sort of urge the university towards greater sustainability. So in terms of looking at pushing towards carbon neutrality, reduce GHG operation emissions, and then also taking a look at the endowment. So that's another way to get involved. Again, not direct investment, but a great organization. I just did want to make sure to mention.
Okay, I think we have 3 minutes left. So does each person want to give a parting shot? 1 or 2 sentences of inspiration to our listeners. Maybe we can go JV, Elizabeth, and I'll go last. Give yourself a minute of positive vibes.
Sorry, I thought I muted it myself. Yeah, just to recap, I think if you're following everything going on right now from social movements and crises abroad, I just think it's exciting to see how private capital combined with responsible investing can drive positive change, and that the more we put pressure as consumers, concerned citizens on both our representatives and the industries that we support with our resources, we can drive change that we want to see, both in terms of social and racial equity, as well as environmental change.
Thanks, I'll jump in. I think there's, for as much disruption is out there, there's also a lot of exciting innovation. I think there is the disruption and the resource constraints and the realities of climate. There's been a lot of not just next gen technologies being born out of that, but also new ways of thinking and new ways of thinking about that thinking and how to measure it. And so I think that's very exciting. And and there's a lot of ways to access it without having to necessarily be a financials person, although it also makes good business sense and you can approach it that way, just as you could from more of the NGO and activist side as well. For those of you looking at where I just glanced at a couple of the questions, like who's hiring and where, I would just advise you to take a look at what department they're hiring in, because when companies hire for CSR positions in communications and public affairs, I'm a communicator, so if you want to do that, that's great. But if you're not reporting up to anyone in corporate strategy or corporate planning or like an EVP, then that means you're an appendage. And that means they're not taking it very seriously, frankly. So if you, I just want to put in a quick like career advice on that front. If you want to do sustainability in a company, make sure you're a part of the body of the company in terms of operations or corporate planning, and not relegated to public affairs if you want to really kind of make a difference. But the other really positive thing is that for all of this tectonic plate shifting that's happening out there, I think resiliency is how so much of it is going to get tied together. And I think that's going to be a really positive thing, because what we are seeing from so many of these issues, from the racial justice through COVID, is that and even think about like opportunity zones and stuff like that, that it's all centering on social characteristics are really important proxies for resiliency. And so like the companies that had great employee safety protocols in place, that had even good employee morales, that were being measured by ESG rating companies in impact investing, who were nimble and they're agile in their operations and could quickly change their products and shift to PPEs and things like that. They were the ones that didn't tank when the market turned down, even if they weren't directly producing hand sanitizers and masks. And so that's that kind of resiliency, and we can look at that a lot of different ways. That is really a powerful thing, social resiliency, and I think that's hopefully going to get counted more and more in terms of mainstream business and finance.
I see we're at time. I'm gonna quickly just give 1 minute. I just noticed the Q&A thing. I'll quickly answer some of the questions. Private equity. I focus most of my effort on private equity. I love it. There's a question about private equity. What I like about private equity is that when I invest in a private company, the money is going right into the company and it's helping the company get started or grow. Whereas if I'm buying shares on the stock exchange, I'm buying them from another investor. It's like, you know, you sell the stock to me, the underlying company it's just a bunch of investors. I mean, they ultimately know who owns their shares, but I love private equity, and there's so much interesting stuff happening in the private equity sector in the impact world. If there's a way that we could email people after this, I don't know if there's a function to do that, but there are a bunch of resources I'd like to send out. You could also look at my website. There's a section called research. I have a lot of reports that I put up there. It's hansaimpact.com, HANSA impact, one word, .com. So I love private equity as well as venture capital. How can we get involved in impact investing? We spoke about that. Funds, fund companies. The oldest one in our country is called PAX. It was acquired by a British firm called Impax. They're great. Legally, I'm not endorsing anything. I'm just telling you who's out there. But that's a pure play impact ESG firm from day one. Domini is like domino, but an I. Parnassus, Calvert. These are all firms that only do impact and ESG investing. Now, of course, BlackRock and everybody else is getting into the game, but there are some, like the names I just mentioned, they live for this. It's all they do. So I can just mention those names. Corporate CSR, I don't know anything about. That's Elizabeth's world, but I'm a little bit skeptical about corporate social responsibility teams and companies. I mean, I think it's often a PR exercise. Some really care, but it's often a PR exercise. That's my cynical view. And we talked about divestment. So that's it. I think we're done.
Thank you so much. Can you hear me all? Or no?
Yes, I can hear you. We can hear you.
Yeah. Well, I don't want to say too much because my bandwidth is terrible, but thank you so much for these alumni for joining us and your expertise. Go to SEATUVA for some previous webinars on how to do impact investing here in Virginia. Might answer a couple other of the other participants' questions. And we will follow up with an email with more resources. So thank you all.
Thank you.